And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. And we certainly had a bit of a wobbly week this week. We're going to review an awful lot. Let's take a look at today's agenda. First and foremost, of course, we're going to take a close look. Where are the current markets? Do you have a healthy backdrop? Is it good to put money to work right now? So we'll get into that. Also, capturing the move into small cap stocks. Now, I will say this week, small caps were flat, but they did have a couple of dynamics that occurred this week that make this group look really interesting. So we are going to take a look at stocks in that smaller space. They gapped up on news, downtrend reversals, and all kinds of interesting phenomena because these smaller cap stocks newer to the party, and they can have really explosive outperformance if you know what to look for. So we're going to get into that. Also, earnings season has started. A lot of large bank stocks, but a lot of other stocks reported as well. So we're going to take a look at those companies that did report because you want to get a feel. We're just starting earnings season. Are we in a period where companies that earn or come in ahead of estimates are being rewarded? What exactly is the backdrop? And then we will go ahead and take a look at stocks that are due to report next week. We have a couple of certainly bellwether names, but we're going to get into all of that, again, using this week as a gauge. Also, as usual, I want to share with you some of the more relevant news, headline news. It was, again, rather volatile this week, a lot of response to those headlines, but we're going to get into that further. We did see earlier in the week, COVID-19 vaccine temporarily paused. All of this is occurring amid a backdrop of rising cases, certainly in the US and worldwide as well, unfortunately. Stimulus talks, they do appear to be fading into the election. Certainly, U.S. Treasury Secretary this week did imply that earlier in the week, and it has carried throughout the week that it is still very much up in the air. Most FANG stocks, now that's actually 3 of the 5 did outperform this week. So we're going to get into that. And this is a good thing. We want to see those former mega cap leadership names come back to life. And then also consumer confidence reported today. It did tick up. September retail sales posted a very big gain. So consumers still really looking bright and positive. This week, Amazon had its Prime Sales Day, normally held in July. They did push it out until this week, and sales jumped 36%. The relevance there is that, of course, analysts then are anticipating a healthy, potentially healthy holiday sales season. So let's go ahead and get in, take a look at the broader markets. This is the S&P 500, a daily price chart, pointing out to you that last week we were in the throes of reversing this correction. We had a blip of a correction, but it did occur. And this week we were able to, Monday, we did have a very nice sharp rally day that did, in fact, help propel this stock even higher above both this red 50-day simple moving average as well as this shorter term 10-day simple moving average. And we did retain a presence above that. Markets were a bit flat, but I will say yesterday's action was really quite impressive, where the S&P was down as much as 1.4%, closed the day down 0.1%. So that was a bullish move in the sense that overall the backdrop as it relates to some of these primary headline COVID related are not particularly positive. Stimulus still out there and murky, and of course the upcoming election, but generally bullish. Although bear in mind that volatility has picked up, and we're going to get into that. Let's first from here take a look at the underlying industry groups. Actually, pardon me, I'm going to go ahead and start here as we usually do with the underlying sectors, the 11 sectors within the S&P 500. And what I've done is sorted them by relative strength, strength to weakness. So take a look. We did highlight this last week. Utilities continue to remain up here at the forefront. This is all about alternative energy and electric. I did a daily 5, I believe, last week and reviewed some of those outpacers among utilities, but it is very focused. Industrial stocks were the highest performers this week, 1.1% advance relative to the S&P that was up less than a half. We'll get into where the strength was there, not particularly compelling or overly interesting to me within, because of course my focus is generally in those higher growth, whether it's technology, consumer discretionary, and elsewhere. So let's go ahead and drill down, take a look further as far as some of these other areas. Financials, we did see we're down 1% this week, but there were some bright spots. We're going to get into that, certainly as it relates to some of these smaller banks that are coming out with nice earnings. Commercial services, XLC, this is internet related, continuing to struggle, but it was up 0.8%, almost 1%. So certainly more than double the S&P 500. We'll get into where the strength is there. And I'm going to share with you 2 stocks within the internet related space. Let's go ahead and drill down further, take a look at some of these sub-industry groupings within the broader markets. So here we're looking at the Dow, the NASDAQ, small cap stocks, banking, biotech, IGV is a software ETF, semiconductors, and of course, volatility. Again, sort it by this relative strength and take a look. Semiconductors remain up here in the forefront. The group overall was flat for the week. Of course, in need of digesting last week's explosive move, still up here sitting at new highs. We're going to take a look at a couple of semiconductor stocks that did report this week, and they are going to have relevance as far as going forward. Again, we are in the beginning of earnings season. So let's go ahead and drill down a bit further, because these 2 areas, software and semi, have been very heavily weighted in my MEM Edge report. They were the first winners, if you will, coming out of this bear market, all about keeping people connected, semiconductors allowing faster data speed and faster data processing and so forth. So let's take a look. This is IGV. This is a high growth tech software ETF. And we can see that it did, in fact, have a very bullish week, up 1.9, almost 2% for the week. This pullback to this 10-day simple moving average, not only for software, but among individual stocks, proved to be a nice buy point for this ETF that's poised to break out of a nice 1-month base. Moving along here, retail. Retail XRT is the S&P retail ETF, mostly primarily online retailers. The group did outpace the S&P, but nothing truly explosive, but it does remain in a confirmed uptrend as consumers continue to open their pocketbooks despite a very uncertain outlook. Moving right along, I did want to share with you biotechs. They did stumble a bit midweek here. A couple of companies came out, Vertex primarily, with not great news. They were halting clinical trials of one of their main drugs, and then other biotechs faltered as well. So the group overall was down 2%, but we're still in good standing. So that's a good view of the broader markets. From here, I was just going to share with you, and I believe I did this last week as well. Actually, I do want to take a quick look here at volatility. And although this week it was very much back and forth, not just day to day, but intra-day, we do still have the VIX, volatility index, kind of resting around this 27 level. VIX above 18 from my work is pointing toward an uptick in volatility. This is that pullback in the broader markets at the beginning of September. But I was surprised to see that the volatility index had not risen any further, but it is still slightly heightened. So from here, let's go ahead because I want to share with you. We'll go ahead and start with some of these small cap stocks. And I wanted to share with you some of these smaller names that have gapped up on the week. And so what we are going to take a look at here, first and foremost, is a small retailer. DLTH is the ticker symbol. So we had this nice gap up today. Take a look at this big volume. The company did get a big upgrade at $22 price target. It's trading now at about 16. So when we see this gap up out, also involving a base breakout on volume, really quite constructive. This MACD moving average, convergence, divergence, black line up through the red. And then of course, the RSI is positive. It's a bit overbought, but it can remain that way. So very interesting looking stock. Another smaller stock that actually also gapped up. And let's take a look. This is INFY, Emphasis Technology. And the company did come out with earnings in here, but prior to their earnings report, they reported that they were increasing hiring and they also had an acquisition. So we can see that the stock really did get quite extended. We can see the RSI up here was overbought. However, it did have this nice pullback to its 10-day simple moving average, nice volume on that advance to the upside. So I would keep that on your radar screen. Let's take a look at another smaller. This is a furniture company, Ethan Allen, ETH. This gap up earlier this week on Tuesday was all about the company pre-announcing their earnings. Actually, pardon me, they did come out with a big, it was a pre-announcement. The company is calling for a very big profit instead of a loss as analysts were looking for. So we did get this big gap up here. And the good news is the stock is retaining that big gap. It's not filling the gap. So this is generally bullish. You want to maintain a presence in this area and consolidate before potentially advancing higher. But it's also good news for other furniture stocks. So if you are in that space, continued vibrancy as people continue to improve their home, office, and et cetera space. Another gap up here in small cap world. This is Genomics, NEO. We can see this big gap up. This is a little bit bigger. It's a $5 billion company. They're cancer focused as far as their labs. And we can see the gap up nicely on volume. This is on news that they are expanding their presence in China. And again, retaining that presence out of that big gap up. I'm going to take a quick break right here. When we get back, we have lots more. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. We're just going to spend a little bit more time on these small cap stocks. Again, the relevance here is when they get going, you can really experience significant outperformance. And this is YEXT, YEXT. It's a $2 billion company. And just taking us, for instance, out of this bear market, the stock at this point was trading at 12.5. And we can see that it very quickly advanced, and it did get up to as high as 20. So that's almost a double for the stock. Well, certainly a little bit less, but you can see, again, you will get fits and starts with these small cap stocks because they are generally a bit more volatile. But currently, YEXT appears to be reversing this recent downtrend, this downdraft. A lot of small cap stocks did not fare so well, certainly during the broader markets pullback in the beginning of September. And what this company does is they help businesses control the facts that are out there about them. They they have what's called a knowledge base. It's utilized by many companies. This price break back above this 50-day simple moving average is what caught my eye, and it did so on very big volume. And also in that period, the MACD broke back above this net neutral zero into positive territory with a positive RSI. So ideally, the stock is just a little extended, but we can see that it's in the throes of potentially forming the right side of the base. Let's take a look at another smaller name that does appear to be potentially reversing its downtrend. Again, a little bit more volatile, but worth noting. This is UNFI, United Natural Foods. It's a billion-dollar company. And estimates for this year are calling for almost 400% in earnings growth. So we can see the stock again broke back above that 50-day simple moving average, not as dynamic, but pointing out what you want to be on the lookout for with the RSI and the MACD, both now in positive territory subsequent to that downtrend reversal. HCO, this is MarineMax, a smaller, about $640 million company, and they are a boat and yacht retailer. A couple of dynamics that I really like about this stock. One is we can take a look here at the explosive advance the stock experienced out of this bear market period. And a lot of that is because, given the lockdown environment, boat sales and the concept of being outdoors with those immediate family or close friends, there has been a huge uptick in sales. So we can see that it did pull back, consolidate this extensive move here, and then this week broke back above that 50-day simple moving average. I think you know what I'm going to say next with this MACD and RSI trending upward. They are due to report their earnings later this week, so keep this one on your radar. I talked about some of these smaller bank stocks coming to life. Actually, before we get into that, let's just take a quick look at KRE. This is the regional banking ETF, and it was actually down for the week, still finding upside resistance here at this downward trending 200-day. But again, there are some bright spots. This is a smaller Colony Bank Corp, CBA, and awfully volatile, but it did break back above the 200-day. So look for a continued advance there. It's a 3.2% yielder. They came out with earnings that were about 40% above estimates. So for those of you that have an appetite for smaller stocks that are potentially reversing their downtrend trends, this could be a candidate. And then last one here, ECOM. Ecom is this company, and we can see that it gapped up here in earnings and then subsequently faltered. More recently, breaking back above this key 50-day uptick here on the MACD and the RSI. This is all about a William Blair Wall Street firm upgrade. They specialize in small cap stocks. So when they talk, when they speak, the markets listen. So that's a good view, I believe, of some of these smaller cap stocks. I do have others if we have time. I'll go ahead and get back. Actually, one last name worth noting. It's in that heavy construction space. This is a base breakout, STRL. Take a look at that huge volume. The company is due to report earnings early November, but analysts are raising their estimates for the stock. They're looking for 58% growth this year. They're all about construction in civil government as well as residential. So keep an eye on this one because that nice base breakout on volume. So let's go ahead and move on. I mentioned we were going to take a look at stocks that did report this week. There were a fair number. I'm going to focus both on the plus side and the negative side, but they are going to be well-known stocks. This is BlackRock, BLK. Company came out with really strong earnings. We can see this gap up and a continuation rally. And this, of course, is telling us that within this particular industry, they are rewarding some of these stocks. BlackRock is a mega cap and it's up 7.5% for the week. When you see these kind of big moves, oftentimes you can drill down into an intraday chart if you are inclined to participate in that upside momentum. And we can see this is that gap up here on the earnings. We're looking at a 1 hour chart. And then after this 4 hour significant advance, the stock very naturally consolidated. But take a look here, RSI MACD still remained up here in positive territory. You were still in good standing, and the uptrend still looks quite constructive. Another company, actually, we're going to move into semiconductors. There were two that did report this week. One of the bigger, better known, is this TSM, Taiwan Semiconductor. And I want to go back to a daily chart because that weekly chart is showing you last week's advance going into the release of their earnings. And the company, in fact, did come out with very strong numbers, 45% improvement in profit. But what we are seeing is the stock pulling back. It was down 1.6% today. So you want to keep an eye on this. When these stocks, particularly bellwether, well-known names, rally to new highs going into their earnings, and then the report is powerful, it's strong, yet the market is not responding, it's telling you that it was priced for profit. Priced for perfection, but more to the point, really buying right before earnings is generally not advised. Let's take a look at another semiconductor stock that did report this week, and very much same as far as the picture. This is ASML. It is a smaller semiconductor, but take a look. The company broke out of this base and rallied into the release, hit a new high. The company did come in ahead of estimates. However, their outlook, they didn't upgrade their outlook going forward. It was in line, and we can see that it did pull back. So we're going to keep an eye on this. Certainly with my work, subscribers to my MEM Edge report, we're all about sentiment. How does the street or investors respond to these earnings as they go into their reporting? Are they priced for perfection or not? A couple of transport stocks did report this week. This is KSU, and they did come in with disappointing numbers. So I'm just going to share another stock, JBHT, down, gosh, almost 10% today. So not really what you want to see. Both of them, KSU, their revenues lagged. JBHT, their earnings, they missed. A little bit of a smaller name, MRTN, in this trucking space. These guys also had a revenue miss, down 6% today. One last one, HTLD, missed on earnings, and the stock was down as well, HTLD. Just worth noting because, of course, we want these transports to excel, to show growth that would imply that the economy is growing as goods need to be transported. Let's take a look at another stock that faltered this week after coming out and also after hitting new highs right before. This was reported last week. Domino's, DPZ, did gap down. The company announced strong sales, but they did have profit margin issues because of increased COVID costs. But again, that concept of breaking out to new highs into earnings. One other name that we can take a quick look at is a smaller cap, First Republican, FRC, smaller cap company that did come out with earnings 15% ahead of estimates. And we can see this nice continued advance, really one of the stronger. We did have this on our list, the MEM Edge report earlier but we're not inclined to jump into bank stocks just yet, but it is a very strong name. Let's move on. We do have stocks that are due to report next week, and you will want to be aware because, again, these are bellwether stocks that could easily have an impact on other names, either in the group or elsewhere. This is Chipotle. We're looking at a daily price chart, CMG. The company is due to report on Wednesday, and the stock is just really quite beautiful. It is poised to break out of this nice multi-month base with a positive RSI and MACD. This has been one of the nicer winners within the MEM Edge report, but we are going to be on the lookout to see because the company has been a real leader in the restaurant space. They've been able to pivot very quickly, and they already had a presence in digital sales, and they have been continuing to improve their, the metric to look for here is same store sales as well as overall growth. They are expanding. SAM, another big winner out of this bear market as bars and restaurants overall have been closed. So CSAM is Boston beer. So consumers are purchasing products from markets, and SAM has benefited. So we can see it is another stock that is hitting a new high, but take a look. This was their other recent earnings. The stock had a huge gap up, but it really has been for the most part in a go nowhere environment, but we will keep that one on our eye. Netflix, bigwig, they are due to report next Tuesday. And so what I like about this as far as going into their earnings, analysts did raise estimates this week. So when you see price target hikes going into earnings, oftentimes analysts aren't going to risk their reputation. So it is generally bullish, would not tell you to buy it going into earnings. That said, because we can see that there just is a general volatility, not only within the broader markets, but this would call for a failed base breakout, but you will want to keep an eye out for this because oftentimes when these bigger companies report, depending on the results, they're very high profile, they will impact the broader markets. This is Tesla. They're due to report on Wednesday. And of course, this is their stock split and other positive China sales news, but this is going to be very closely watched as well because we can look at some of these other auto stocks. GM gapped up today. Ford is doing really quite well. So it's been a really vibrant area within the markets, these car sales. So let's take a look. Another semiconductor stock that is due to report next week, Lam Research, LRCX. And we are going to keep an eye, of course, on this one because it is approaching a new high. It's a smaller one, but certainly worth noting. WST, this has been a big winner, again, with the MEM Edge report, but they are due to report next week. West Pharmaceutical, they provide injectable products, very, very relevant in this COVID-19. So we're going to be on the lookout for how this particular company fares. Are they still expanding? They're a very global company. And of course, with COVID cases, unfortunately, continuing to increase, we are anticipating upside for WST. And then Lithium Motors, LAD, we talked about auto sales, and these guys are providers to that market, really consolidating ahead of the release of their earnings next week. I'm going to leave it at that. For those of you not familiar, take a look at my website, MEM Investment Research. You can use the link below to trial my MEM Edge report, not only keeping you super in tuned to the broader markets, but also providing individual stock selection with entry and exit points as well. Everyone, have a great weekend, and I'll see you next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.